Welcome, everyone. I'm Mike Brashazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journey, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome back to another exciting episode of the What Matters podcast. I'm your host, Mike Brashazadeh.
And I'm Ashley Ward.
And we have the pleasure of speaking with Rob Nelson today, the CEO and founder of NorthRock Partners, an RIA based in Minneapolis, Minnesota, with over $4.2 billion assets under management.
Bringing 30 years of industry experience and executive management experience to his role in the company, Rob provides vision, direction, and strategy, continuing to develop a firm and business model centered around clients' unique needs. Thank you for joining us today, Rob.
Happy to be here. Thanks for doing this.
We're excited to have you with us. Let's dive right in. So Rob, can you share with us and our listeners your story behind NorthRock Partners? How did you build the company and what inspired you to create an innovative and client-centric business model?
Happy to. Yeah, for NorthRock Partners, started the company a little over 30 years ago. This is really all I've ever done. I graduated on a Friday, started in this industry on a Monday. And how lucky was I to land in this industry? When I graduated college, I was referred into this industry in my senior year. I had a major in business with an emphasis in computer information systems and finance. But the lucky break for me was not only getting referred into this industry. I was referred into a company called IDS Financial Services. IDS over time became American Express Financial Advisors, ultimately became Ameriprise. But the business model at that time. This is 1993, the beginning of 1993. Their business model is you're an independent contractor. That was a lucky break for me. I probably didn't recognize that at the time. I probably wouldn't have signed up to be an independent contractor if I would totally known what that meant. But being self-employed from the beginning, and that's all I've ever known. But the real big break for me was at that time the company had made a decision for any new advisors that were affiliating with the organization. The only way that you could work with a new client was on a fee basis and comprehensive financial planning. And it was true comprehensive planning. So I came in, the business model was, as many other companies at that point in time, it was a little bit old school. They're sending out mass mailings into the community. We're following up for people that are requesting information on financial advice or financial planning. And you're just trying to schedule meetings to try to draw people in to be their financial advisor, financial planner. And started building one client at a time over my first year and a half. Started drawing in a lot of people that were corporate employees, got lucky and started working with a couple of corporate executives. And the model was to help them on all aspects of financial advice, investments, tax, insurance, estate planning, and so on. And as I was doing the work and following through on promises that were being made, clients started referring us. And by the middle of my third year, it was becoming automatic, where the referrals were coming in enough to sustain the business, started hiring employees, and just one client at a time over a 10, 15, 20-year period of time, ended up building a large base of clients, primarily corporate leaders, corporate employees, and to where we're at today. Actually, today we're at $6 billion of assets. We have 160 employees. About 15 years ago, we also started getting referred into professional sports. So we have over 100 clients in professional sports. But our core business is still corporate employees. Entrepreneurs are also a big part of our business. And I consider us a multifamily office. We're providing advice on all aspects. So we've been doing tax for over 20 years. If you're a corporate executive working with us, you tend to be direct depositing all of your paychecks with us. We provide you the right stream of income. We file taxes in all 50 states. We have in-house legal and estate planning. We've had that for quite some time. We'll run your estate planning from A to Z. We have a charitable platform called Foundation X, where we'll help you with all charitable giving. So all of our clients that are charitably inclined will not only construct and manage all the charitable giving, but we'll build the foundation, manage the foundation, all lines of insurance, life insurance, disability, long-term care, property casualty, health insurance. And so the idea is a lot of our clients are time poor, and it's helping them with not only all things in financial advice, but it's just advice. Our goal is to be the client's trusted advisor, supporting them on all aspects of their life.
Well, it shows how right we were with $4.2 billion in assets. We switched from RIA database to just to our favor there, we switched from RIA database because we were getting wrong information there. So I apologize. We were pretty off on that number there.
Well,
I appreciate it.
the interesting thing, Mike, is just a year ago, we were at 4.2. So it gives you a little bit of what our growth is.
Wow.
I mean, we have been going through a little bit of a growth moment.
Wow.
A little bit. Yeah.
Wow. So
Wow.
you guys have grown about 30% and 33% in the last year there.
We have. I mean, 5 years ago, we were at $1 billion. So we're going through. Yeah.
That's insane. Can you talk? Let's talk about that. What propelled that growth? How'd you guys get there?
It's come at us from a couple of different ways. One, clients have been having success. Our business model is to help clients on all aspects. We're one of those few organizations where we custody everywhere. So when a client logs into our website, they see all assets as of last night's close or last valuation date. So we're managing their entire balance sheet, executive compensation, 401ks, deferred comp. We trade in the 401k. We'll hold assets at almost any institution that's out there. And so as clients are having success, we just build structure and people around what they have going on. So clients having success. Our model is advocacy. Our retention last year for clients was 99%. It tends to be in about a 98 to 99%. So it's these strong personal relationships. So you're really maintaining the client relationships, building strong trusted advice with them. And then over the last number of years, we have started to gain traction in inorganic growth, where we have advisors that are approaching us. Advisors have been approaching us for a handful of reasons. One, they recognize us as a deep value provider. So, one of the trends that's happening in our industries is in this industry is advisors are trying to expand beyond just investments or some of the basics of financial planning and tax planning. They want to do tax preparation. They want to do legal. They want to provide estate planning. They want to manage the trust and so on. And we've been positioned that way for a long time. So it's the combination of adding new advisors for us as an organization. We now have about 24 financial advisors, and we anticipate we'll probably double the number of advisors over the next 12 and 18 months as well. So we're kind of getting prepared for the next wave of growth to double again here over these next 18 months. But it's those different avenues for growth that have been transforming our business.
Wow, that's insane. I mean, 5 years ago, you guys are just at $1 billion. And it's not that, Ashley and we talk to firms that are, 10 billion, and they don't even go from 10 to 12 billion in 5 years. It's kind of like they hit a point and they just stay. Or we talk to people that have been at 5 billion and they go from 5 to 6 billion in 5 years. And ultimately being in a high growth, being in this high growth sector where you guys are at, and your company being so high growth, how have you been able to manage that? I mean, there's a lot of new personalities to manage, a lot of new clients to manage. Can you tell us about that?
Yeah, it's what you'd expect. It's been a positive challenge. It's just you're feeling right now. We still feel like we're as a startup company. You're going through that moment with 160 employees. But 15, 16, 17 years ago, we didn't have any full-time leaders. And over this last 5 or 6 years, you're professionalizing the organization. You're bringing in dedicated leaders. So now us having over 15 leaders in place, it's providing the opportunity for myself to be more focused on what I'm good at, as well as bringing in leaders that specialize and that have expertise. We have our CFO comes from the industry and has been working as a CFO for over a decade. So having having people that are leading our advisors, leading components of our advice, have somebody leading our investment platform, having somebody lead our tax platform, because we break our advice out by teams. I've got an investment team, insurance, tax, banking and bill payment, legal and estate, and charitable. And so you're building these teams over time. And the big thing is that the firm is getting better. So our model is, as we get bigger, we will get better. As I double in size and my tax team goes from 15 people to 30 people, that team collectively gets better, and it has an impact on all of the work we're doing for clients. And so we're really excited about this next wave of growth because we know that it'll make a material impact on the quality of the work we're doing for all of our clients.
Really cool.
Wow, that's very impressive. I want to talk a little bit about, your journey. Along your entrepreneurial journey, what are some of the most valuable lessons that you've learned that you'd like to share with aspiring wealth managers, or maybe someone who's looking to break off and start their own independent firm?
Yeah, there's a couple of different lessons, and we all experience them through the journey. And isn't that what this is all about? Probably some of the biggest lessons that I've had is one is the benefit of team. Being a independent advisor for the first 20 years of my career, basically, I really didn't grasp or understand the benefit of having a collective team around me of other leaders, of other advisors. And in 2008, I brought on a dedicated partner. And that was one of the best things that we've done. It's actually accelerated a lot of the growth that we had of having people being able to specialize. So for me, there's been a power of team. Everybody gets to do this their own way, and that's part of it. The part I always give to kind of the next generation of advisors or the next generation of employees is that the reps matter. Putting in the time, especially early on in your career, you're in your 20s and 30s, being able to put the time and the energy to master your craft. For advisors, many of the advisors coming into the business, like all of us, we would like to have a quick path to get there, but a lot of it's learning the business from the ground up. People that are coming into our industry, especially new advisors, a lot of times we'll have them start in operational roles where they get to learn the business from all the components of advice, learning every aspect of advice, even from to what an IRA is to understanding the core components of tax planning, but learning the business from the ground up, getting the reps and putting the time in, sitting across the table from other professionals. Mentorship is a really big deal. But those are some of the biggest lessons that I've learned along the way. I still have my closest mentors around me at this point in time. And even really to what you're talking about, this growth moment, having people around you that have been there, done that, that's been instrumental for us.
So tell me where you see the company in 5 years from now.
For us, 5 years from now, we're taking this one step at a time because the quality of the work matters. We want to stay really, really focused on what got us here, doing really great work, strong personal relationships. But as we grow over the next 5 years, it's crossing that next path. I remember when we crossed the $1 billion mark, that once I hit that $1 billion mark, I knew that we had a clear path to 10 billion. I knew we would accomplish 10 billion. And that felt good. And so you start setting that path to 10. Now for us, we know right around the corner is a path to 10. So as we hit 10 billion, then it's setting that clear path to 100 billion. So we're setting up structure for being a $100 billion organization. We're setting up scale, professional leadership and guidance around that. We're setting up an M&A platform that allows us to have the right types of advisors joining us as an organization. And then we're setting up the right teams around delivering the client model that's going to be compelling for the advisors that we want to have join us on this next leg of our journey.
Really impressive. And let me ask you this: how many of the people that you started the company with are still with the organization?
Ooh, that's a good question. Well, today my first full-time employee who started with me 29 years ago is still here. She's 2 doors down from me.
Wow.
So there, I tell her she has no retirement plan. But and so of my first 5 employees, 3 of the 5 employees are still here. I'm actually starting to go through that experience. I've had a couple people retire, and I have no path or no plan to retirement at this point in time. I tell everybody I'm going to be the old person walking around the halls, but I love the business. I see myself doing this as long as I can.
Cool.
Wow. And I love that you said, you guys are setting yourself up the strategy to be at 100 billion. I mean, we ask this question all the time. Where do you see yourself in 5-10 years? And people always will say, they'll be at 5, they'll say they want to be at 10 or 15, but the 100 billion mark, I love that. In a competitive landscape, Rob, how do you manage to differentiate your firm and create, a unique value proposition that resonates with your very unique clients? It sounds like you have a very diverse group of clients.
Yeah, the differentiation for us is coming at it from a couple different paths. One is today, and you can see that the industry is catching up on this. Our breadth of advice is already a differentiator. The ability for us to do full-scale tax, working in the number of states that we're now starting to actually do quite a bit of work in Europe as well. But having in-house charitable, having in-house legal. So the depth and breadth of advice is one thing. But actually, it's the next part for us is the depth of advice. So if we're going to provide insurance, it's going to be comprehensive insurance advice. So a true life insurance, disability, long-term care, property casualty, health insurance advice, which can sound, you think about property casualty, doesn't sound very exciting, but the vast majority of clients, new clients that come to us, They don't have a strong personal relationship with a property casualty provider. They haven't had anybody look at their property casualty insurance probably in the last couple of years, and there's gaps in the coverage. And so that's just one tiny sliver of an area of advice that we want to be able to help take that off the client's plate. So going deep with advice, and then continuing to expand our value proposition around what the client's pain points are. As we look to the next 10 and 20 years, I'm not worried about what the services are that we're going to provide. We're simply going to listen to our clients and what they need and continue to deliver. One of the things that I see as we continue to build our model, maybe 15 years ago, a client would come to us, pay a fee and look for a rate of return. Now a client comes to us, pays a fee, and they're looking for time. So time is a new deliverable. How can we help take things off your plate? A large number of our clients are professional money managers or are in the money management business. They're CFOs, they're mutual fund managers, they're hedge fund managers. They're smart enough to be able to do this. They just literally don't have enough time. And so providing peace of mind to help people execute, that's actually a big part of our model is execution. It's not only going through and having a meeting with a client that's as complicated as the meeting I'm having with you right now, where you're looking people in the eye, you're building a relationship with them, but it's getting done with a meeting with a client and telling them, hey, we just talked about 10 things and we're going to follow up and we're going to handle 9 of the 10. We're going to handle the execution of that. And so that for us, the model is continuing to expand what we do, but doing as much as we can to support the client in successful execution.
I like that. And, speaking of success, how do you measure success as a leader or in your role as a CEO and founder of a firm?
I'll start at a high level, but for me, it's impact. For me, what's fuel for our organization, I view that we are a purpose-driven organization. The people that we're hiring, the roles that we play, our clients are telling us. We just got done with our annual client satisfaction surveys, and it's the first thing that I want to do is I want to read through all the comments and how our clients are feeling about us. Right now, 95% of our clients are rating us at the highest levels in our survey of the impact, and they're talking about feeling cared for. They're talking about us having an impact on their life. They use the word love. They're talking about the relationships they have with team members. Tonight, I'm having dinner with one of my first professional athletes. And when we got together in our last meeting, he took time afterwards to talk about the impact of where he's at in his life because of what this relationship has meant to him and his family and our people within our organization. They feel the same way. That's why we're here, is to have an impact to improve people's lives. And that's what I would expect it'll continue to be for us going forward. And it's not just our clients. It's having the impact on our people, on our employees. We're building a business model that when you think about all the things we do for clients, I want what we do for our employees to be in parallel. I want us to have the same type of impact that we're having on our clients as on our people. So as we're going through this journey, not only are there the right career paths, but we're having changing their lives and helping our employees have their version of legacy. So those are a couple of areas that I think about for impact for us as an organization long term. And of course, having fun as we go through this journey.
So I was going to ask you a question. You said that you guys have done some inorganic growth. Can you elaborate on that a little bit? At what point did you guys decide that, or have the opportunity to say, hey, this might be a good strategy for us? And if you don't mind me asking, how much of your company have you guys grown through inorganically versus organically?
Yeah, we did it the right way. Our first acquisition was a smaller acquisition. Maybe it's $100 million in assets. I think it was about 2014, and it was intentional. Where let's make sure that we can do this the right way, because we are an integrated firm. I describe us as an integrated firm where, as people join us, we're looking to provide advice and components of advice in a very consistent way. It's not everybody operating on a completely different model. You can think of it, if I had 24 advisors working with the tax team and all in a different way, it's very tough to scale and very tough to streamline and build amazing process. So for us, we brought on our first organization, worked on brand transitions, people transitions, integration of advice. Almost any organization we work with, we're going to be expanding what they provide for their clients too, and being able to successfully do that. Once we went through our first transition, we knew that we could have success with it. It allowed us to be in a position where we had our first large acquisition in 2019, about a $1.4 billion for us, for a team that was out of Chicago. And that along with a couple of other has just transformed our business, because it's what I talked about is immediately it expanded all of my teams for advice. So immediately I add two tax professionals. Immediately I add another attorney. Immediately I add 3 more people on my investment team. And it just, once we knew that we could have successful integration and the transition with the clients, our transitions with the clients from other organizations has also been very successful. You know, we're well over a 90% transition rate when we're bringing clients over from other organizations. So that's been successful. And for us, I would say it's about half of our business today is probably from inorganic and half of it's from organic.
Real cool.
And how do you maintain that culture that when you acquire that firm and bring it over, how to keep everyone aligned with the NorthRock's core values there? How is there any difficulties you experience or challenges that you think would be helpful to know for other future people or other wealth managers who are looking to do some M&A or inorganic growth there? Can you elaborate on any difficulties you experience or challenges and how to overcome them?
Yeah, that's a great question. We did it instinctively to begin with, and now it's intentional. And what I mean by that is as we're adding new team members, we're talking a lot about what a day in the life will look like, so everybody knows exactly what they're getting themselves into. So as we add new advisors, we're looking for advisors that want to work in a team. They're looking to master the craft. They want to expand the value proposition. They having relationships and being that trusted advisor is what they're looking to aspire to be. They want to play a strong role in their clients' lives, and they want to be a good team member. So those as you're doing that intentionally, and even for our hiring practices, we hire for curiosity. You're doing those types of activities as you're looking for the right team members, because that's not for everybody. That's not for everybody. Some people might want to have autonomy and do it their own way, and that's okay too. I've hundreds of friends in this industry, and we all have a different way of doing it. But for us, it's been very intentional. Tomorrow I have a really great meeting with a senior advisor that we're talking about joining forces on, and half of our conversation is why are we doing this? What's the next 5 and 10 years is what you guys are asking me. What's the next 5 and 10 years look like? What gets you out of bed? What's your purpose? And if it isn't a purpose-driven model, if it isn't down a path for excellence, a lot of times this isn't going to work. And so intentionality has been a big part of how it's been successful on bringing in other team members. And it's really worked. It's really worked. When we bring in a prospective client that meets our team members, or when I bring in this advisor to meet my team members, I know what they're going to say when they get done with the meeting, and they're going to give me compliments about the people that they've met. And so having this where I'm surrounded by these just quality people supporting it comes through in all of our interactions. And again, that's been very intentional.
And Rob, let me ask you this. Have they all kept with the integrations of the other teams, have they all kept your name? Or is there DBAs as the other companies named after the other companies? They keep their own DBA, or they go under NorthRock?
Yeah, we've all been operating under the NorthRock brand. So
that's awesome.
And that's worked. It really is. It has worked. And we're starting to see that impact in some of our marketplaces that we're getting recognized. Obviously, we're in Minneapolis right now, but we're starting to gain recognition in Chicago, and beginning work in San Francisco for large offices. And we have a sports and entertainment brand that's called NorthRock X. And NorthRock X, we have enough people in professional sports where we're starting to get traction, getting that brand out. And that's new for us. I'd say our first 25 years was really do good work, wait for the phone to ring, and build the business that way. Now, all right, let's get our name out there a little bit. We're not on billboards by any means, but we're being thoughtful about how we bring the brand to life.
That's really cool.
Very cool. And so you have NorthRock X and then Foundations X, correct?
Yeah, Foundation X, all of our charitable side.
Yeah. Can you tell us a little bit about that?
Yeah, Foundation X it's probably over this last couple of years one of the things I'm the most proud of. We had this for Foundation X. We had a number of things converging at the same time. One, we had a fast-growing number of clients that were incredibly charitable, and we wanted to play a strong role. And the responsibility that we were having in helping them with their charitable goals was continuing to grow. In addition to that, we wanted to have a strong role of giving within our communities. As we were helping some of our most sophisticated clients establish a foundation, we recognize that charitable giving is very dislocated, meaning that if you're building a foundation, it's almost like building a small company. You're going to work with somebody else, work with somebody on a business plan. You're going to work with a separate attorney. You're going to work with a separate tax professional. You're going to work with a separate branding company. And many people have a vision for what they want to do for giving, but they haven't built a business before. And even for my own personal foundation, it was very frustrating going through the process of being able to assemble a plan. And so we saw an opportunity in the marketplace for us to be able to maybe play a role in the communities of providing charitable support. And then the fourth component was actually providing and helping our employees in their charitable giving. And so we decided to do all of that under our Foundation X brand. It's a nonprofit part of our business, all aspects. If anything ever hits the bottom line, it's going to go back direct into the communities. And so our goal, and that part of our business has been operating for the last 2 years. We've been involved in charitable giving for all of our clients for 30 years, but actually formally under Foundation X. And it's having success on every aspect. We're playing a much stronger role with our clients. Actually, our employees are completely grabbing onto this. So helping our employee be a more effective giver than they otherwise would, not only through mentorship, but helping them have the formal plan. And then we hold that part of our business direct out into the community. And we have foundations that are coming our way, having us help them put together a brand plan, helping them with governance, helping them with their books, or the entire plan and running their foundation. And it's been having a lot of success, and we're definitely filling a need in the marketplace.
Really cool.
That's wonderful. So looking ahead here, what do you envision for the future of wealth management? Any trends or technologies that you believe will shape the future of the industry?
The reason I pause on that is that if you think of the number of trends that are happening in this industry at the same time, we'll look back at this time in history, and this is going to be the most transformative time ever in financial services. It's just, there's so much happening at one time. I do view the vast majority of it as a positive, but it's a lot. You think about, we're in the first inning of AI. I don't think the industry really is grasping what the impact is going to be on AI. Blockchain and digital currency is happening, where you're having growing deployment of direct and private markets. You've got a retiring, the last statistic I heard was 40% of advisors are going to retire within the next 10 years. So you have a changeover. You have the vast majority of advisors wanting to expand more what they're doing for financial advice. And now you also have more and more advisors looking to provide advice beyond financial services. So there's a number of trends that are happening that are going to transform the industry as we move forward. For us, we're putting together a path and a path of action on all of those. I mean, you almost have to. If you're in our industry, you have to have a plan to address private markets. Private markets have been having success for the last 20 and 30 years, but now you've got it where you can actually execute and have it be scalable across all clients, and even clients that have a couple $1 million of investment assets. So it's a really great time for the consumer, but it's a very complicated time for the practitioner. So if you're an advisor that's you have $100 million of a business, you got $1 million of revenue. There's some complexity of how you build this. Obviously, with technology and tools, you can grab onto it, but it's a lot. But this is probably the fastest change moment that I've ever experienced in our industry. And for us, we're putting together an action plan on each of them. But the trends are significant, and we're leaning in.
Yeah, that it is crazy to think about everything that's changing. It's almost happening so quickly in this period of time. You said it really well. Just it's such a transformative time.
Yeah, I was taking notes on it. That was such a mouthful.
And
40%
of advisors retiring in the next what was that? 10 years? Yeah, that's a lot. That's a huge number.
A lot.
Yeah. What do you think is going to happen with that?
If we don't lean in as an industry, we're going to have a challenge, because if you look at the number of people that are looking for financial advice, if you go back, the number of people, we talk about this internally a lot, so this statistic stands out for me. If you look back to 2008, the number of households that have over $1 million of assets, is basically like 4 or 5 times more people in the United States that have more than $1 million of a net worth. I say that just because that's where people start to look for financial advice. but the number of financial advisors has basically stayed the same. So you have this leveling off of financial advisors and likely the declining number of financial advisor that's happening, and we're not backfilling fast enough. So for us, I believe we have a responsibility to bring the next generation in. That's new for us. Over the last 4 or 5 years, we're just starting to actually set up best practices to bring in the next generation. We believe to show them the industry the right way, to show them the industry, show them the financial advice and financial planning the right way. But it's an investment. It's a big investment of the future. Most people that are coming into our industry as a financial advisor, you really don't figure it out until you're 5, 6, 7, 8 years into it. So it'll be organizations like us, and then we've got to be at the university level. So there needs to be an education. We're starting to actually have in some of our neighboring communities, we're starting to even go to the high school level. We're starting to introduce high school students and college students to what financial advice and financial planning is. But there's not a high enough awareness for our industry what it is. And so what an exciting time for somebody coming in. What an exciting time. You've got more people looking for advice and not enough people delivering it. And you're building these strong personal relationships based on competency. So I think getting that out is going to be important for us as an industry.
And so does that kind of play a role then? And when you guys are recruiting new advisors, are you guys looking at those who are just graduating with their degree, trying to bring them in as an advisor, or like your firm, you said you usually put them in operational aspect first, but do you guys recruit towards more of a younger generation of advisor?
We are. It's both because we need both. We have a more complicated client coming our way. So we're getting more sophisticated clients. Those, I don't know what you call sophisticated client. Those clients that are in that 20 million to 200 million range, where they have a level of complexity where you need seasoned, experienced advisors that have 15, 20 plus years of experience that have been there, done that. At the same time as that next generation of advisor, for us, I will not take credit for it because a lot of other people in our business pushed on this, was our internship program. It's been amazing. It's been a game changer for us. We started an internship program a decade ago, and some of those interns are now successful advisors in our office.
Wow, that's really cool.
Yeah, it's like we've seen it because they've learned the business from the right way. They haven't been, a lot of times if we have an advisor that's coming from maybe a more narrow part of the industry, and again, I'm saying this with respect, is maybe they've come from a mutual fund desk, or they've come from maybe just providing life insurance, or from a tax business. It's a lot to teach them. And so for us, we're trying to actually teach the next generation that intern all aspects of advice. And so the learning curve is far greater, but it allows them to get a head start where they can be in a better spot 5 years from now.
Thank you.
I think that's very important. Yeah. So shifting gears a bit, Rob, could you share with our listeners and us what investments or sectors are you most excited about right now? Where do you see is the next wave of wealth creation? It's a loaded question, I know.
It is because for the wealth creation, you already have it in a sense, kind of in being loaded in right now. And what I mean by that is, you think about the wave of emerging technology that's coming. You have competitive technology gains happening across the planet. I've just 60 Minutes had a special on how China and the U.S. are competing there last night. And you look at how competitive the universe is right now for technology gains across all developed markets and beyond. And so you have this emerging wave of technology that's coming. So that provides an opportunity. I mean, things like what's going to happen for voice technology in our industry for the next 2 or 3 years. Also, what's already here, but we haven't really seen it come to life yet, is a blockchain. Digital currency is going to provide an opportunity. It's not full scale yet in our industry. There's a need to keep the consumer safe, but do we really believe that blockchain and digital currency isn't going to be widespread across our clients 5 and 10 years from now? It will be. We're going to have a responsibility. It will create opportunities, especially on what blockchain can provide. And then it's actually bringing private markets to life. In private markets, I've been having success for especially the last decade. But the opportunity for us to leverage areas within private markets, right now, like example, you'll have pockets at different points in time. Today, there's an opportunity in private credit. Number of banks and lenders are actually not being able to fill the needs of companies that are out there, especially private companies, and the opportunity for us to come in and be a side-by-side investor within the private markets. It provides an opportunity for those companies. It provides the opportunities for our clients. And so those are a couple of areas that we look to continue to gain awareness, be thoughtful. We're like most organizations, we're going to keep the client safe and diversify, especially as you get into venture or private equity and beyond. But it does create a really great wave of opportunities for clients and consumers moving forward.
And I got a final question for you here. The economic outlook. There's been so much that's happened since the COVID-19, with interest rates, the 10-year Treasury bond going from 0.5% to 5%, now hanging out there in the mid fours. The stock market, we had a little bit of a meltdown. Well, I should say more of a little bit of a meltdown in 2022. And there's been so many things that have taken place in the last 36, 40 months. What's your economic outlook for the next 36, 40 months? And you know what? We're not going to pin you on anything that you say here. I would love to hear your input, though.
Yeah. I think we've learned over the last 18 months to not listen too much to predictions, since almost the predictions have been. Actually, I don't know anybody in the last 18 months that got the interest rate prediction right. And so for us, I'm very cautious this is from my individual point of view, but I'm very cautious over the next 18 months, just because of the number of variables that are impacting markets. We talk about the complexity that's happening globally. It has the ability to predict markets. It makes it much more challenging. But you look over the next 5 to 7 years, it's tough not to be bullish. Over the next 5 to 7 years, you have not only that wave of technology that's happening, you've got global expansion. You have a global competition that's happening on a wide scale. In the United States, you have basically a complete workforce that's fully employed, which provides an opportunity. Interest rates are at a point in time where are expected to come down. Companies are focusing on profitability. So there's a lot to be bullish on, I think, overall on the long-term perspective. In the short term, everything you read is true. In the short term, we've got global tensions. You've got the possibility of trade wars as we move forward. Interest rates could provide some instability. Concerns of actually what's happening. It could be even the short term on the political fronts. So you have a number of things that would have pricing related to equity markets. Equity markets tend to be a little bit of a premium pricing. So I wouldn't bet against markets. That's not my point at all. But I think as a consumer, I would be prepared for a number of different scenarios in the short term. But long term, especially with a 5-year plus type of time frame, we tend to be pretty bullish, especially on growth-oriented assets.
Thank you.